The U.S. presidential election is over. After a very divisive campaign, we have President-elect Donald Trump taking office next year. Joining me this afternoon is Alan Valdes to weigh in on what we saw this week in the markets, and he is with SilverBear Capital. Alan, thanks so much for joining me.
Wild week so far, and you're right. This 2-year odyssey of an election is finally over. Thank God.
Well, Alan, first and foremost, I do want to ask you about what we saw in the markets. As the electoral vote results were coming in, we saw a major downturn in global equity markets and future prices, but we did get that huge rally on Wednesday. So what do you make of all of this? And is that rally a result of expectations for lower taxes and less regulation?
That's it in a nutshell. You know, you saw on Tuesday, I guess it was Tuesday morning now, I forget when, but when Florida flipped after being in the Hillary camp and it went to Trump, that set the futures in action. You started to see them tank that moment. And then when Pennsylvania went for Trump, that was it. The show was over, and the futures fell 900 points, basically. Myself, under the traders, saw that as a great buying opportunity. Not for the long term, because we were just looking at, you knew it had to bounce down 900 points. It was going to bounce the next day for sure. So we did buy a lot of futures early in the mornings overseas in Asia and Europe. But then you got to notice, as it got closer to the opening here in New York, that institutional investors started looking at a Trump presidency. They saw that, hey, you know what? He wants to cut taxes, which are at 35% for businesses, down to one of the lowest, 20 or 25% in that range. Good for the market. He wants to cut back on the 86,000-page book on regulations and cut that back. That in itself is like a $1.9 trillion tax on small business, all those regulations. He also wants to bring back money into the country, which would magnificently get business investment growing, which of course would hire people, more disposable money to go out and spend in an economy that's powered by consumer spending. You want to see that.
And Alan, I think you've explained what we saw this week on Wall Street, but for some Americans out there who are concerned about healthcare or Social Security, what do you expect to see?
You know, it's going to be a bumpy ride, that's for sure. It's not going to be easy. It's going to be a bumpy ride. Healthcare, the cost right now with Obamacare on a silver and bronze plan, this year alone, they're going to go up between 22 and 25%. There's no easy answer to that. Remember, aging baby boomers, there's 95 million of us, and they're starting to not work, go on Social Security. So that's a complicated issue. I don't know if there's any easy answers, not only here but around the world on health care. On Social Security, that will always have to be here. People invested in that. There are all going to be cuts. There are all going to be hits. But I don't think you have to worry about that anytime soon. The health care, I don't know, and I don't know if anyone knows how they're going to bring down costs. One of the ways Donald Trump wants to do it, President-elect Trump, I should say, is that he wants to have more competition. That usually does drive down costs. We'll have to wait and see. But you take Arizona, for instance. They have one health care insurer. You can raise prices wherever you want. Nobody can go anywhere. All of a sudden, you have 10 healthcare insurers in that state that will drive costs down.
Alan, last but not least, I do want to ask you about more about what we can expect from the Trump presidency. But for now, we do have that Fed rate decision coming in December. So, of course, investors and Americans alike should be concerned about what we can expect. So do we expect a rate hike in December?
Well, the betting's going for it. I mean, on Friday, there was a 72% chance of a rate hike. After the Trump victory, that jumped to about 87%. So, I mean, if you go by that, yeah, I mean, you'd have to go for a rate hike. I still think it's too early to tell. I mean, you look at the bond market yesterday, there was a rate hike right there without raising rates. So I'm not so sure you'll see it in December. You'll probably see it next year as inflation creeps back into the economy. December might be too early.